The most important step you can take to understanding stocks is to have the right mindset about what a stock is. Buying a stock is investing in a business. Every time you hear the word stock, think of a slip of paper referring to a small slice of ownership in the business. When you buy a share of stock, you're entitled to a small fraction of the assets and earnings of the company. Assets include everything the company owns, including buildings, equipment, and trademarks. And earnings are all the money the company brings in from selling its products and services. Many people are wrong from the start by thinking of stocks as those lines that bounce up and down in their computer screens throughout the trading day. An easy way to visualize what stocks are is by imagining a pie that is for sale. That pie represents a company. As the business brings in profits or experiences losses, the size of that pie will either shrink or grow. When you buy a stock, you buy a tiny slice of that pie. Unlike actual pies, when you get a slice of stock pie on your plate, it will grow or shrink in correlation to the entire pie. This example is a deep simplification of what a stock is, but it contains a fundamental truth. When you buy a stock in a company, you are buying a slice of that company's pie. If the company does worse than before, its stock will fall, and the pie will shrink. If the company does better than before, the stock will rise, and its pie will grow. So why do companies want to issue these slices of assets and earnings off to the general public? Because it needs the money. Companies only have two ways to raise money to cover costs and expand their business. They can either borrow money, called debt financing, or they can sell stock, which is called equity financing. The disadvantages of borrowing money are that the company has to pay back the loan with interest. By selling stock, however, the company gets money with fewer strings attached. There is no interest to pay, and no requirement to pay the money back at all. Even better for the management, if the company fails, they don't lose all of their money. They lose the several thousand smaller slices of pie that have been bought by other people. Remember, having the right mindset about stocks is key to truly understanding them and being successful with them. The most important concept from this lesson is that owning a stock is owning a share in a business.